Today, we're going to pull back the curtain on one of the most powerful but kind of invisible engines in all of global finance, Intercontinental Exchange, or as most people call it, ICE. They just wrapped up a record-breaking 2025, and believe me, how they did it tells us a ton about the markets today and where everything's headed next. So let's dive in. Here's what we're going to cover. First, we'll see just how ridiculously good their 2025 was. Then we'll break down the three pillars of their business: the exchange engine, their powerhouse data services, and their big bet on the mortgage market. And we'll wrap it all up by looking at how they're getting ready for the future with stuff like AI and tokenization. So first things first, what made 2025 such a monster year for ICE? Well, to really get it, you first have to understand the job they do for the entire global economy. It's pretty fundamental. The best way to think about ICE is as the world's financial plumber, right? They own the big flashy stuff, like the New York Stock Exchange, sure. But they also run the markets that decide the price of the natural gas that heats your home and the interest rates on your car loan. It's all that essential, invisible piping that just lets money flow where it needs to go. And this quote from their CEO, Jeff Sprecher, is everything. It sums up their entire strategy. They're not trying to guess which way the wind will blow. Nope. They're building a machine that's so tough and diversified, it just works no matter what the economic weather is doing. And in 2025, that machine was firing on all cylinders. So let's talk numbers. They pulled in a record $9.9 billion in net revenue. But get this, it was their 20th consecutive year of record revenues. I mean, just let that sink in. 20 years in a row. That kind of consistency is just wild. And it's all because of that all-weather model, mixing businesses that do well in totally different market conditions. And this wasn't just about making more money, it was about making money more efficiently. Adjusted earnings per share shot up by an awesome 14% year over year. That tells you they're not just getting bigger, they're getting better and more profitable. And if we zoom in on just the end of the year, you can see they finished really strong. They beat what all the Wall Street analysts were expecting on earnings, and while revenue was pretty much right on the money, the big picture here is one of a healthy, profitable company just cruising along. Okay, so where did this record performance actually come from? Well, a massive part of the answer is in the first pillar of their business, the exchange segment. This is really the heart and soul of ICE's operations. The exchange segment is, well, it's pretty much what it sounds like. It's their network of global marketplaces where trillions with a T of dollars and assets get traded every single day. We're talking everything from stocks on the NYSE to the complex futures contracts that let airlines lock in fuel prices. And in 2025, man, this engine was absolutely roaring. They saw record trading volumes. Their energy business, which is a huge strength for them, was up 15% for the year. No surprise with all the global uncertainty. And the New York Stock Exchange, it's still the place to be. It landed 7 of the top 10 IPOs and even managed to steal huge companies like AstraZeneca from other exchanges. That's a huge win. But you know, trading is only part of the story. The second pillar of ICE's business is just as important, especially now, their fixed income and data services segment. This is where all that raw market noise gets transformed into something really valuable. See, every single trade creates a little bit of data. This segment's job is to scoop up all of that proprietary data, blend it with some powerful analytics, and then sell it as a subscription service. It's basically the high-octane fuel that powers all the automated trading and risk management systems their clients use. And you can see just how much demand there is for that fuel right here. Revenue from their data tech grew 10% in Q4. And even better, recurring revenue, the holy grail for any business, was up 7%. But check out this last one. The amount of money and funds that track their indexes shot up 20%. That steady, high-margin data business is like the bedrock for the entire company. And they're not just sitting around. In a really fascinating move, they just partnered up with Reddit. Yeah, that Reddit. They're now feeding real-time social media chatter and sentiment scores directly to their professional clients, giving traders a whole new way to understand what the market is thinking. It's a perfect example of how they're always looking for the next thing. All right, let's shift gears and talk about their third big segment, mortgage technology. Now, this part of the business has been in a pretty tough spot lately with higher interest rates and all that. But the real story here is actually one of resilience and really smart strategy. So you've got this kind of push and pull thing happening. On one side, yeah, the tough mortgage market created some headwinds. But on the other side, ICE is seeing these really powerful tailwinds. Transaction revenue jumped 20% in the last quarter as the market started to find its feet. They're getting more cost savings out of their huge Black Knight acquisition than they even planned for, and they just had their best quarter all year for signing up new clients. So what's their secret weapon here? It's AI. Through their platform called ICE Aurora, they're using these little AI-powered agents that can automate all the complex, tedious, manual parts of getting a mortgage. This makes their clients way more efficient, which makes ICE's platform a must-have, even when the market is tough. It's a great example of using tech to solve your customers' biggest headaches. And that focus on technology brings us perfectly to our final section. We've seen how ICEs are dominating today. Now let's look at how they're literally building the markets of tomorrow. For ICE, it seems like the next frontier really comes down to two big things: scaling up their AI infrastructure in a massive way and pioneering the regulated tokenization of real-world assets. And they are putting some serious money where their mouth is. Their spending plan for 2026 is around $750 million. A huge chunk of that is going straight into building new data centers and loading them up with the high-powered AI gear needed for the future of finance. The other huge bet is on tokenization. Now, don't worry, this is way simpler than it sounds. It's basically the process of creating a unique digital version of a real-world asset, like a share of stock, on a secure network. This could completely change the game, making trading and settling assets way faster and a whole lot cheaper. But here's the really important part about how ICE is doing this. They are not trying to be some crazy disruptor. They are carefully and methodically trying to evolve the system we already have. Just look at step 4. They're planning to get approval under existing SEC laws. They're treating this like a responsible evolution, not a Wild West revolution. And that brings us right back to their core mission, summed up perfectly by this quote again. Their entire identity is being a trusted, neutral operator of the system. Their whole approach to new tech is guided by that one simple principle: build stable, reliable infrastructure that just works for everybody. And that leaves us with this one final, fascinating question to think about. For years, people have been talking about the promise of tokenized assets. As finance gets more and more digital, could it be that a trusted, established player like ICE, a company that works with the regulators, not against them, is the one that finally makes that future a reality for all of us? It's definitely something to watch. Thanks for joining.